Hi, I'm your host Satwan, and welcome to this episode with Dan Moshkovich from Chargeflow. If you'd like to listen to the audio version of this podcast, please visit the website at thepayments.show. If you would like a PDF transcript of the episode, please visit thepaymentsshow.substack.com. Thanks and enjoy the episode. Dan, welcome to the Payment Show.
Thank you for having me.
Fantastic to see you. Hope you're ready to go.
Absolutely.
Where are you joining from today?
I'm joining from sunny Toronto.
Good stuff. And you're a local from Toronto?
I was actually born in Tel Aviv, but I moved here as a child and grew up here. So I've been here since.
Good stuff. Well, thank you so much for joining. Really excited to go through your company and its offerings. I'm going to give you an introduction and we'll take it from there. So, Dan, you're the Vice President of Marketing at Chargeflow. And very simply, Chargeflow helps e-commerce brands recover chargebacks automatically through AI and software mainly. And I always like to start the show with some stats. There's some pretty shocking ones here for this episode. So, according to your internal data, 8 out of 10 chargebacks are first-party fraud, which means friendly fraud. And the trend's getting worse. And just to back that up with some stats from Visa, found that nearly 1 in 5 consumers who filed a chargeback have committed first-party fraud. Losses from friendly fraud totals over 25 billion a year. So there are some crazy stats. And thankfully with your solution, you're offering some great ROI to your customers who need to win those chargeback disputes. So things like 4 times ROI, industry-leading win rates. So a lot to talk about there. So first of all, just like to hand it over to you if you can give an intro to your company and how I've set the scene there and how you're addressing it.
Sure, absolutely. So Chargeflow, as you mentioned, is a solution for e-commerce merchants that helps them mitigate a lot of the problems that arise from chargebacks. It's not just the lost revenue that's associated with that. That's something that a lot of customers overlook, is also the overhead that's required to collect the required information that's needed for a successful dispute. So I think we did some very basic research, and it's something like 1 man-hour of labor to collect all the required evidence that's needed for the financial institutions in order for them to rule in the merchant's favor. So you're losing the product, the revenue, and the overhead that's also becoming a major problem. So if you think about that, if you have like 1,000 chargebacks that you're planning on disputing per month, that's close to 1,000 man hours of work that you have to put into it, and it's becoming a major issue for especially some of these larger merchants that process a lot of revenue and a lot of transactions, and even the smaller ones that we service. They don't have the capacity, they don't have internal teams to handle all this work. So our solution is 100% automated. We do all the work for them. We submit everything for them, and we're able to do it because we enrich all the evidence using third-party signals and additional data. We're able to achieve a much higher win rate than the merchant would on their own, and in addition, they don't have to do anything. So it's a win-win for them and for us as well. So we're happy to service basically anyone who has these chargeback problems, which is, as you mentioned, quite a lot of merchants, if not everyone.
Yeah, sure. I wanted to explain to the audience the kind of problems we're talking about, because on the face of it, before I got into this game, I, like many people, I'd heard of friendly fraud or people committing fraud like that, but never really thought much of it. But I didn't realize quite how big the problem was. It's 80-20 almost. 20% is real fraud and 80% is friendly. So even though we accept that, well, let's look at why that 80% is there. And I'm sure you can expand on some of these points. And I got these from your State of Chargebacks report 2024. So anyone listening, I'd highly recommend that you go to the Chargeback website to download it. So the 5 or 6 sort of key areas that were mentioned, and I just want to pick on a few. So reason codes for chargebacks and the trends for different industries, and also the transaction values as well, combined with why it's so important for businesses to increase the speed of resolving those chargebacks. Now, there's a whole bunch of others that we can talk about, but it'd be great if you could just touch or expand on some of those that
absolutely.
I mentioned.
Absolutely. So I think a good point to start this would be that 80-20. Why are we seeing such a high amount of friendly fraud versus traditional fraud? So I think a lot of it has to do with the fact that there's a lot of technology that merchants have put in place in the pre-transaction phase of the transaction process to detect fraud. So there's a lot of solutions, a lot of technology solutions that are also AI based that help merchants identify potential fraud before the transaction is processed. So they're able to filter out a large segment of potential fraud because for various reasons, the identity theft, and it's, obvious that somebody, a card in person in Toronto, for example, isn't making purchases in Tokyo, for example, and that card may be stolen. And those kinds of things get flagged by those kinds of systems that are sitting on the pre-transaction space. And those systems have been in place for quite some time and have gotten very, very good at detecting that kind of pre-transaction fraud. The challenge with friendly fraud is that it's the actual person that the card belongs to. So it's not like a fraudulent transaction during that step. It's somebody that has their card and does a legitimate transaction. So these fraud filters and these fraud engines or anti-fraud prevention engines won't detect that. They will just let that through because it's that person who's making that transaction. It only happens on the post-transaction when that becomes an issue with chargebacks, and that person decides, the item didn't arrive, the item or the item, was defective, or it could be a million reasons, or they just decide that they don't want to pay for the item, which is most of the occurrences. And then they initiate a chargeback with their financial institution. And at that point, that's when the merchant has to have some kind of solution in place to help mitigate that kind of issue, is basically have something that will prove to the financial institution that the item was sent, that the item was received, that it was as described, that this is essentially an illegitimate chargeback. And then rule in favor of the merchant. So that's kind of what's been happening over the years, and that's why we're probably seeing that skew towards the friendly fraud side of things. And with regards to the different, the verticals and the different kinds of, the nature of the chargebacks that we're seeing, or the different amounts of chargebacks that we're seeing per vertical, I think it has a lot to do with the nature of the products. And so when we're looking at these things, we're looking at almost on the merchant level. It's like not even on the industry level. We're looking at the specific merchant. But for discussion's sake, for example, the nature of the product has a lot to do with the amount of chargeback that the merchants would receive. So, for example, for an apparel, which is a big segment in this space that we're seeing a lot of chargebacks in, a lot of the reason codes that we're getting is not item not as described, which makes sense because it's a garment that may not fit, and the person, instead of sorting it out with the merchant, goes and initiates a dispute through their financial institution. And that's another issue that I think is being overlooked. Is recently it's becoming very, very easy for consumers to initiate chargebacks. If pretty much every banking application allows you to go into your, through your mobile, look at the transactions on your credit card, and initiate and basically start a dispute through the app, and without even almost having to call anyone. And in the past that wasn't the case. In the past there was a whole process. There was you'd have to call your bank, you'd have to speak to a specific department, they would have to ask you a bunch of questions to kind of get your side of the story. And a lot of times they would stop those chargebacks because they would tell you, well, if it doesn't fit, maybe try contacting the merchant, try resolving it with the merchant, and try sorting it out. And so a lot of those chargebacks were being prevented on that level as well. And now that's become, not the case. And there's a lot of, the ease of making chargebacks for consumers has improved significantly. And the people who are suffering from this are the merchants at the end of the day.
So the credit card industry just not worry about that anymore because they just write it off?
Well, it's not so much the credit card industry. I mean, the credit card is just facilitating this. And this is, again, a misconception that a lot of consumers have, is that they think, well, it's the credit card will give me back my money. And they don't realize that a lot of the time, or all the time really, is when a chargeback is initiated, all the credit card companies are doing is taking the money back from the merchant and giving it back to the consumer. The consumer thinks it's just, it's the bank or the Visa or MasterCard that are kind of covering the cost. And so I think that's another excellent point that we should discuss, is the consumer education of the whole chargeback process. I don't think that a lot of consumers understand, what happens when a dispute is initiated. They only see is, a transaction on their card, they dispute it, and at some point they get the money back. So for them, it's, no big deal. They don't know where that money came from. They're not aware of any additional fees that the merchants have to pay. They're not really aware of what the impact on the merchant is.
Yeah. One point I wanted to discuss was the win rate analysis. So, why is there a difference in win rate between industry verticals? For example, apparel, so clothes and travel, the win rate for a chargeback is quite high. So when I say win rate, that means in favor of the merchant.
Right.
But for electronics is low. And that's just some examples. Can you explain why that is the case?
Yeah. So again, I think it's a lot to do with the product itself. So it's a lot easier to submit compelling evidence for certain items and certain types of products. And it's a lot harder to do for other items and other products or services even as well. So that's really the main issue, is that when merchants, when we look at the reasons for the chargebacks across those verticals, it's typically, not as described, which means the item, didn't look right, or didn't have the right color, or didn't fit, or anything like that, or not received. And so those are the two main, the main reason codes for those verticals. And it's a lot easier to submit evidence, that for the merchant side, for those specific products. And typically the financial institutions will rule in the merchant's side of things if they submit the right evidence. So that's probably the main reason why you see such discrepancies across different verticals.
Okay. Well, I'm just trying to dig into that in my mind a bit. So I'm just thinking the clothes versus electronics. So I would imagine it would have been the other way around. So a piece of electronics can do X, Y, Z, and it's quite straightforward. Whereas clothes, if you say, well, it's not quite right, doesn't fit me properly, I'd say that's more ambiguous. So shouldn't it be the other way around?
It should, but I think the way that the financial institutions look at it is the merchant sold a garment or sold an item that has a certain fit, and the person didn't try it on. Obviously, they didn't get a chance to look at the item before buying it, trying it on. And so I think it becomes, I guess, a question of how the financial institutions look at it and the type of evidence that's submitted. And I think, that really comes into play when the decisioning is made. And I think that makes it a lot easier for those. Again, it's hard to say because it goes by case, and a lot of times it varies. So it's, sometimes it's hard to explain exactly why the reasoning for those kinds of win rates, but that's the data that we see.
Sure. And one final thing I want to pick on from the report before we move on to talking about your solution was the different win rates for the transaction amounts. So another thing I saw was that lower value transactions, so $0 to $100, have got a 40% win rate for the merchant to win that dispute. And then with the higher values, it goes down. So again, is that similar to the reasons we talked about earlier for the verticals?
Yeah, I think it's a few different reasons. I think there's more scrutiny on the higher value transactions. I think both from the merchant side and from the financial institution side. So I think they're more likely to rule in favor of the merchant, assuming that the evidence is there and is compelling enough. Especially if it's like, a gray area, but it's like a small transaction. It's under, like you said, under, $30 or something like that. They and the evidence is strong enough, they will rule towards the merchant. I think when it comes to some of the larger volumes, the larger transaction volumes, is the bank will, or the financial institutions will kind of put more scrutiny on the dispute and would want to see a more rigorous evidence collected on the merchant side and submitted on their behalf to make sure that, we're making the right decision in this case, given that it's such a high amount. This could have a big implication on the consumer side. And at the end of the day, a lot of these financial institutions are primarily working with the consumers. That's who their customers are, and so it's always skewed towards the consumer. And if there's any kind of doubt, they will rule in the consumer's favor, and that's where it comes into kind of the higher amounts. Is like I said, there's more scrutiny on those kinds of transactions.
Sure, thank you. Okay, so let's move on to talking about the solution. And well, one of the first things I wanted to talk about right up front is that your business model is 100% success-based. So if a merchant chooses your solution, you charge a certain percentage of the recovery value in the dispute. Mm-hmm. And that means you're fully aligned with your customers. And that's how you get to that 4 times ROI that I mentioned right at the start of the episode. And you've even got enterprise and special pricing for companies that have chargebacks more than 100 per month, right?
Yeah, so I think that's kind of why we built the company in this way. I think one of the things that I do want to mention is the co-founders were e-commerce merchants themselves, and that's kind of where this company idea came from. Is that they were in the cosmetics industry, and they were dealing with these chargebacks, and they were looking for a solution that will address this problem, and they really couldn't find one, so they had to build one in-house. And it really kind of solved a lot of the problems. And when they told some of their friends who are also merchants, they kind of, okay, well, let's try, can we use your system? Because it sounds like, it's doing what we needed to do. And there's really wasn't anything like that available on the market. There's a lot of enterprise kind of, big, heavy enterprise solutions available to merchants, but there's really no solution for SMBs or kind of some of the smaller merchants that I've mentioned. And so the goal has always been to align ourselves with the interests of the merchants. It's not just another platform fee where you pay us X amount of dollars per month or per transaction. We want to make sure that we only charge for the revenue that we recover for you. So there's 2 things. One, we're able to recover more than you would on your own. So we're already kind of improving the performance of the chargebacks. And again, as I mentioned earlier, there's a lot of costs associated with the overhead. So we're eliminating that for the merchant altogether. So they don't need to worry about hiring, an in-house person to kind of analyze all the transactions and submit the evidence and do all the manual work. We do all that for them automatically, and the success rate is higher. So we kind of kill 2 birds with 1 stone, and we only charge for that revenue that we require. And that kind of makes it a very, very strong selling point, that, there's no onboarding fee. There's no kind of per transaction or per chargeback fee. There's no monthly licenses or anything like that. It's 100% success based. And that's kind of what we want to make sure, that we're aligned with the merchant, and so this way it's a win-win for both of us. Even after taking our commission and our fee, that rate is still higher than what the win rate that they would generate with us is still higher than what they would on their own. And again, there's no overhead involved, so they save a ton of money trying to fight these chargebacks.
I mean, for an SMB, it would seem like a no-brainer completely, because you're not going to have a team of people.
Absolutely. And I think that line, the no-brainer, I mean, we hear that across every merchant that we talk to. It's like, well, this is a no-brainer. I mean, I don't have to, deal with chargebacks, and I recover more revenue at the end of the month, and there's not much else I need to do here. So again, that's really, I should probably put that on the website somewhere. It's a great line, but again, it's aligning with the merchant and making sure that both our solution and their needs are aligned.
Yeah, that reminds me of something I read many years ago. Use your customer's language. There was a story about how there was a guy selling DVD. You could burn your pictures onto a DVD, digital photos, and it was a great service. And he just couldn't figure out why he wasn't selling people multiple copies. And he'd put on his website, you can buy duplicate DVDs, here you go. And no one was buying them. And then he decided to contact customers and ask them, well, why are you not buying duplicates? And they said, we were looking for extra copies and we couldn't find them. And he just changed duplicates to copies and his sales just went vertical.
Yeah, exactly. So it's really a solution that merchants that, as I said, you see the trends, they're going up. We're seeing much more chargebacks coming in. It's never been easier for a consumer to initiate a chargeback or a dispute with their financial institution. So it's only going to get worse. And so we want to make sure that we're addressing all of those pain points without kind of charging, an arm and a leg for that kind of service.
Sure. A couple of aspects of your solution that I want to talk about. So I mentioned that it's based on AI and software, which is great. So two main parts of your solution, I think. So ChargeResponse and ChargeScore. So ChargeScore actually enables forecasting chargeback success rates for the first time. So it'd be great for you to chat about that in a moment. And also for your ChargeResponse solution, is using smart algorithms and leveraging millions of data points to help increase that win rate. So it'd be great if you could chat about those two aspects of the solution.
Yeah, absolutely. So I'll start with the ChargeResponse. I think the industry is evolving in this direction, is that the financial institutions that are reviewing these chargebacks are seeing, they change their rules of what compelling evidence is needed in order to successfully resolve a chargeback. And it requires that it be compelling. That's what it's called, compelling evidence. And so we need to make sure that the submitted evidence includes all the right information and presented in a very specific way. There's very specific templates that need to be built in order for the financial institution to rule in a positive favor. And that means that the evidence has to be collected and presented in a certain way. And if it's not, that really kind of reduces your odds of winning that chargeback. And so that's a lot of things that merchants also struggle with, is when they try to do their on their own, they're not really familiar with these nuances of what these institutions are looking for in the dispute evidence. And so they throw stuff together into the template and hope for the best, and that really doesn't work, especially given the volume that these institutions and chargebacks
it's kind of like going to defend yourself in court.
Exactly. If you don't have the right evidence, you're going to lose the case.
And even if you ask things the wrong way, it doesn't matter.
Exactly. So you need to kind of be very, very careful in how you present your side of the story. And for example, the item not received kind of reason card, it's like saying, well, the chargeback was initiated because item wasn't received. But if you show, a lot of the shipping carriers nowadays, they take a picture of the item on the porch, or they take a signature upon receipt of the item And that can be used as evidence. And so it's a matter of kind of collecting that information. And again, we collect thousands of different data points. Carrier information is one of those data points. And so if you present that properly in that evidence case, you can show that the item was indeed received. Here's a picture of it, or here's the signature of the person who signed it at the residence. And it becomes a lot easier to win those cases. And so, but again, a lot of merchants don't know that or aren't including that kind of information. They may include just like, item received kind of from their CRM or something like that, but they're not really including the evidence that kind of shows and points specifically. Here's the signature. Here's the picture of the item on the porch. It was clearly received, so this should be ruled in our favor. So that's really kind of the main thing. And we're always updating this algorithm, and the system is to collect more and more external signals from various other platforms and to make sure that the evidence submitted is robust enough that and accurate enough that it presents a compelling story and that it gets ruled in the favor of the merchant.
Yeah, that algorithm must be one hell of a secret sauce you got there. Are there any data points that you use that you can talk about? Is it all top secret?
It's kind of behind the scenes. The as I mentioned, the data from the carrier is just one data point of many, and so that's really kind of there's there's hundreds, if not thousands, of different data points that we can collect and that will help us win the case. And again, as you said, that's part of the secret sauce, and we keep those cards pretty close to the chest.
Sure. Well, if we bring it back to the real world, I did see you do also have a human element in certain cases. Is that correct?
Yeah, that's correct. So again, in certain situations, the systems will flag it as kind of like, okay, we need to kind of enrich it. We need to have a human look at this case specifically because it's missing something, or it could be a high value item, or there's a few different reasons why a human would get involved in that process. It's typically when the system essentially decides that it doesn't have enough evidence in place, or it needs additional kind of guidance on this specific case as to what to do. So that's when a human analyst would come in, take a look at the case, review it. We're still not at that stage where AI, despite everybody's kind of running towards that point, we're still not quite there that, everything is 100% AI and 100% automated. Humans are still involved in the process, and they still require, the machines still need us for now. So thank God.
Yep. No, sure. That's fair enough. I did want to ask a bit about the competition. So obviously you've got... Let's put ourselves in the shoes of a small, medium business. So, okay, they've got no team. And on the other extreme, they've got your solution, which is great. I mean, there must be other solutions at the moment. Can you talk about some of those and some of their weaknesses?
Yeah, there are other solutions out there. I think a lot of them have different business models. I think that's kind of the main issue, is that a lot of them are also geared towards more enterprise clients. So they have, these are companies with hundreds of millions of dollars, and they have entire in-house teams and analysts in place. And a lot of these other solutions are essentially saying, well, instead of doing all this work in-house, let us kind of outsource it to us and we'll handle it for you. So a lot of these other competitors focus on those kinds of markets, on more on the larger side of things. One of the reasons why Chargeflow again came into being was because the co-founders were running an e-commerce business and couldn't find a solution that addressed SMBs essentially. So the goal was to provide an enterprise grade solution for SMBs, and really there's very little competition in this space. There are other kind of Shopify apps here and there that kind of address this issue, but it's not really they're not really doing it on the scale that we're doing it. They're not seeing as much data as we're seeing, and so we're able to provide a much higher win rate because we see so many transactions. We're able to train our models in a way that makes them more effective. The more transactions, the more chargebacks that these models see, the more effective that they become in their winning. So for us, as we scale, our solution actually becomes more effective. So it's part of kind of the great thing about AI is that, it's all about the data that you have and how strong and how and the amount of the data that you're able to feed these algorithms, they become more effective. And that's, again, part of the human element in some of these training these models becomes also apparent, is that our analysts are specialists in chargebacks. They understand kind of what the financial institutions want to see from dispute and evidence, and they're able to train the models accordingly. And so that really kind of, those two things together really help us constantly improve our win rate. And so even as we onboard more merchants, the system actually becomes more effective.
Yeah, that was my next topic, onboarding. So again, your website states you can get started literally in minutes. So I'd imagine that's another huge advantage of your competitors, because it sounds, if they're enterprise focused, it means long engagements.
Yeah, absolutely. So a lot of times as you can imagine, with enterprises, everything does take a lot of time. There's a lot of development resources that are required, and a lot of development capital to integrate some of these solutions to the enterprise on the enterprise client side of things. What our goal is to build out as many native integrations to various payment processors and platforms that we can, so that we reduce that time spent in implementing our solution. And so with regards to our current onboarding, it's really very, very simple. We have a ton of integrations to a ton of different platforms, payment processors, e-commerce solutions. And it's really a matter of connecting those into our system. And again, that's really requires authorizing those systems. If you're on Shopify, it's just as easy as installing the Shopify app. If you're on Stripe, it's easy as installing the Stripe app, and then you go from there. And that's really all it takes. Once we are integrated into your back end, it really becomes very, very simple and quick for us to start reviewing chargebacks. We look kind of at some of the historical data, and that really helps us to get a leg up kind of on the chargebacks going forward. And that again, part of the value props that we're able to offer merchants is that, especially on the SMB side of things, is that you don't have to, there's no development capital required to integrate Chargeflow. It's basically connect to your systems, and we're up and running.
That's great. I'd love to hear some customer success stories you've got, and also, if you can, some nightmare scams or frauds that you found with your Skynet algorithm.
Yeah, so with regards to success stories, what we're seeing is that one great example is WordTune, and WordTune is a solution for almost like that helps people using, again, AI to write better copy or write better emails, and it essentially allows them to fix their copy almost in real time. And what we found is that our solution was able to significantly reduce, again, the overhead that they required in fighting these chargebacks. They're a subscription-based service, so a lot of their kinds of chargebacks were, on the subscription renewal side of things, and we're able to, submit the right evidence that's required to fight those chargebacks and help them win. And we were able to, I think, 4x or 4.8 times improve the losses on their chargeback. So that was a huge win for us and for WordTune specifically. And it's a great partnership that we're working together with them. They're using our native Stripe application. So again, there wasn't any kind of sophisticated overhead required to integrate Chargeflow into their payment stack. And they were up and running very quickly. And we were able to kind of protect their revenue for them. And that's something that they're happy about. And obviously we're happy that they're succeeding.
Great. That's a good story. And any major scams or frauds you found?
Yeah, there is a lot. And what we're seeing is, I think the level of sophistication on some of these types of frauds. And again, this isn't friendly fraud. This is more on the actual fraud of things. We're seeing almost very sophisticated fraud rings. And this is a big issue in fraud prevention for e-commerce, is kind of almost organized crime. These are very skilled actors who are able to obfuscate their kind of intention and get by through a lot of these fraud filters. And there's a whole fraud economy happening, and under the surface there's, on the dark net, there is even specialties in specific fraud. So there's people who are responsible for acquiring the credit cards. There's people who are responsible for doing the actual transactions. And then there's, it's almost like a company, but if you think about it, it's like very specialized roles within these rings, and they're able to kind of, again, be very, very clever with how they, with their attack vectors. And a lot of times these aren't seen by the fraud filters that I discussed earlier, but they're a lot more visible kind of after the fact on the post-transaction side of things. So we're able to pick up on those things and kind of address those as actual fraud and alert the merchant, obviously, that this has taken place. But it's becoming a real problem for e-commerce merchants is the level of sophistication from some of these fraudsters.
Yeah, it got me thinking recently, because I've seen so much more, as you have and everyone listening has, about fraud just going through the roof. It got me thinking whether you might start seeing click and collect only e-commerce operations, and eventually you might have to actually go to a bank to prove you're real, because you've got synthetic IDs and stuff as well.
Yeah. I mean, there's a ton of different solutions available now and around, KYC, know your customer, and that's becoming a major aspect of kind of the way that e-commerce businesses do business online. They want to know who they're selling to and if that person is the right person making that transaction. And as I said, friendly fraud is a lot harder to address in these cases, because it is that person. It's this person. It will get by all the KYC filters. It will get by all the fraud prevention filters, and it's still, the merchant will still suffer from those chargebacks. So it's a tough nut to crack. And as we get through, as we improve our technology, we hope that we'll able to address some of these problems. On the fraud side of things, it does seem that, as you said, it's becoming a lot more sophisticated, and these solutions is essentially a cat and mouse game. Of in the past I've worked at one of these kinds of solutions, and whenever we would come up with something, fraudsters would find a way around it. So fraud isn't going to go away. There's always going to be some other attack vector that's going to come up, and that merchants kind of have to stay vigilant. And these, both on the pre-transaction and post-transaction side of things, the solutions will have to kind of stay sharp and stay up to date and continue to innovate and continue to improve their capabilities.
You must have so many cool stories, crime and all that kind of stuff in your company. Do you publish any of these on a blog or anywhere, or have you got a podcast or anything where people can find out about it? Because I'm sure it could turn into a mini Netflix series at some point.
Yeah, absolutely. So I actually co-own a small publication called Merchant Fraud Journal that covers a lot of this information. And my partner and editor is basically running it day to day. He runs a podcast called To Catch a Fraudster. And it's basically this. It's stories from solution providers in this space. And they discuss all these different attack vectors that they've experienced. And a lot of times it's pretty wild stuff. It's really, like you said, it can come up with its own little mini series. But the podcast is called Catch a Fraudster, and you can check it out. Bradley Chalupsky is the host of that podcast, and he hosts all these various technology solutions that are in the fraud prevention space. And they talk about this. And it's really, really wild stuff, that some of the frauds that these companies have come across and how they address them. So highly recommend it.
Fantastic. I will definitely be listening to that. Thanks for that.
Sure.
Almost at the end. One thing I did want to ask you, is there anything that you wanted to get across to any business owner or sales director listening that maybe I've completely missed and that you felt it's important to get across?
Yeah, I think that there's a lot of, a lot of customers that we speak to at first kind of chalk up chargebacks to the cost of doing business. And it doesn't have to be like that. And we've, talked to, thousands of, customers and merchants. And a lot of times they're like, well, it's a $20, $30 transactions. I'm just going to write this off. It really doesn't have to be that way. There are solutions, and $20 here, $30 there. That quickly adds up, and you really need to kind of address that. And even $1 shouldn't be going to an illegitimate chargeback. That's the main takeaway, and I think that's something that a lot of merchants aren't really aware of, and they may fight some of these the larger transactions and try to dispute those on their own. But at the end of the day, if they're not looking at it kind of holistically and as kind of one big problem and addressing every single chargeback that they get, they're essentially leaving money on the table. And given how razor thin margins are on e-commerce, every dollar counts. And if you could improve your net margin by half a point, 1 point, that's huge, and that adds up. And again, that's something that I do want to get across is chargebacks should never be the cost of doing business online. It should not be a barrier to doing business. Merchants should not be afraid of this, and they should be kind of going after every single dollar that they can.
Yeah, it's like the broken windows paper that talked about the importance of going after petty crime. It's critical.
Exactly.
Yeah. Excellent. What are your company's biggest goals right now and in 2024? And can people meet you guys in any conferences or anything coming up?
Yeah, absolutely. So our goal is to continue kind of our operation, just continue scaling that at the pace that we've been doing up to now, if not more. And you can speak to us on our website, chargeflow.io. We will also be at Shop Talk 2024 in Las Vegas next month. We'll be happy to speak with anyone who's attending, and basically anyone who wants to talk to us. Our door is open. Happy to jump on a call and showcase our solution, demo what we can do, show basically how much ROI we can bring them. And it's again, like you said, it's a no-brainer, but a lot of times people want to see it for themselves. So we're happy to show that, and our sales team will be more than happy to showcase the solution and showcase the benefits.
Great stuff. And once again, it's chargeflow.io, and on Twitter you guys are at ChargeflowHQ.
Correct.
So thanks for that. And I want to finish on a fun point. Just would love to know what you're reading or watching or listening to at the moment. Doesn't have to be anything related to tech or business. Sure,
absolutely. So I'm actually listening to your podcast, but to additional podcasts. I'm listening to the Acquired podcast. I really love those guys. They kind of talk about the histories of various companies out there. And it's not just kind of, it's big companies. It's Costco, Amazon, LVMH. It's really the history of those companies, how they started. And it's fascinating stuff. Podcasts are, the episodes are usually 3-4 hours long, but it's riveting. And I love business. I love e-commerce. I love kind of hearing and learning about how these companies came to be, and how did Amazon get to where they are now, and kind of they do a lot of research into what happened behind the scenes, and it's fascinating stuff, and it's riveting. I really enjoy listening to them every opportunity that I can, and highly recommend everybody to try them out.
Great. I think my brother listens to that. I haven't got round to it myself yet because they are quite long, as you mentioned. But I'm sure
it's well worth it. Well worth it.
Maybe next time I'm on a long flight to Australia, I'll listen to an episode.
Absolutely.
I'm reading Limitless at the moment by Jim Quick. Not sure if you heard of that book.
I have not. I'll have to check it out.
So it's all about improving your memory and learning, etc., becoming a speed reader and all that good stuff. And I'm surprised how much or how many great tips I've learned from that book. So yeah, helpful when you're reading a lot like me. So
I'll have to check it out. Same here.
Yeah, it's a very good book.
I go through a ton of reports, a ton of information that within this industry and in general would love to be able to kind of pull in more than and in less time. That would be great. I'll have to check out that book.
I'd highly recommend that. And if you don't have time, try out a Chrome extension called Bionic Reading. Have you heard of that?
I have not. I have not.
So I saw it about a year or so ago. It's really good. So the idea being that because we can recognize words at a how to describe it, at a higher level, you don't have to read them, but you can just sort of see them, is the best way of describing it. And what it does is it makes the front part of each word dark and the back half of each word light. And the idea being that because your brain, after reading half of a word, knows what it is, you don't have to read the other half.
It completes it for you, basically. And
your brain
does. Yeah.
And it's fantastic. So I used it for a bit. I thought it was cool, and then I stopped using it because I think the browser extension disappeared. But I reinstalled it again today because I had to read a very boring white paper style piece of text, and it's very good. So I'd definitely check it out.
Will do. What's it called again?
It's called Bionic Reading.
Bionic Reading. I'll have to. I made a note.
It's fantastic.
Will do.
So thanks a lot, Dan. Really appreciate your time.
Likewise. Thank you so much for having me.
I wish you all the best. And if you IPO, give me a heads up.
I will.
Give me an insider trade. So yeah, all the best to you and good luck at your event that's coming up next month.
Thank you so much. And thank you for having me and taking the time.
Thanks.